Tariff man is finally back. Trump just said that he will be putting 100% tariff on Chinese products starting from November, and the markets clearly didn't like it.
We're gonna win so much, you may even get tired of winning, and you'll say, please, please, it's too much winning.
We saw a very sharp sell-off in the Bitcoin prices on Friday, same on the Nasdaq, same on the SPX, and same goes for the oil as well. All the risk-on markets fell sharply on Friday after hearing about the tariff news. Meanwhile, gold and silver, they kept on trading near their fresh all-time highs. Now the questions which are arising right now are that, is this going to be a takeover? Are there going to be any major dip buying opportunities in the market like previously, or this is just the start of a major market sell-off? Are we going to see more new all-time highs in gold and silver? Should we buy them straight away or should we wait for a pullback? All of this we will be discussing in this video, and we will also look for possible trade opportunities forming in this market. So without any further ado, let's start. First of all, heading over to our mRKT terminal to see what actually happened on Friday. We are currently on the Nasdaq, and we will just go and analyze this candle on Nasdaq so we can understand things in a bit more efficient way. We can see on Nasdaq what actually happened, that Trump announced 100% tariff on China, escalating the trade war. Escalation of US-China trade tensions drove broad risk of sentiment. US government shutdown added uncertainty and added pressure on equities. Nasdaq led declines as the tech sector is highly exposed to China trade, and global markets also sold off in sympathy to the US indexes. So this was the general impact on the markets which happened, or general summary of the tariff uncertainty. Now the headlines which led to this pullback was this one: Trump, United States of America will impose a tariff of 100% on China over and above any tariff that they are currently paying. If we click on this candle, we can get a summary of this analysis of this news, and we can also see what assets it is impacting. We can see it had a negative impact on the US stocks, on the USD, and on the Chinese currency as well. Meanwhile, it had a positive impact on gold and a positive impact on the US bonds. So this was a general recap, a general summary of what happened on Friday. Now heading over to our charts and going in a bit of a history first. Okay, so we can plan our trades in a bit more efficient way. Now, previously when we saw such type of a news, such a type of a trade escalation, tariff trade escalation between China, between America, and between America and some other countries, what we saw in gold? We saw gold topping out. We had such news around the April 1, April 2, April 3, and in that time period, we saw that gold actually topped out. And after that news, we saw that gold prices saw a 6% plus decline over the course of 3 to 4 days. We saw gold topping out in times of uncertainty, and after that, starting from April 7, April 8, after April 9, something like this, we saw gold stabilizing and bottoming out, and even starting to create some fresh new all-time highs. So this is what happened previously. Now the question is why gold didn't shoot straight to the upside? Let me answer this. The thing is that when there is some sudden uncertainty in the markets, when everything is falling, like the US indexes, the crypto market, dollar, when everything is falling, and because of some sudden uncertainty, investors liquidate their positions. And they don't only liquidate their positions in the risk of assets, but they in the risk on assets, but they also liquidate their positions into safe haven assets as well, like gold. That's why initially, whenever there is a sudden uncertainty which no one saw coming, we saw gold prices topping out instead of going straight to the upside. We see a profit taking kind of move in gold before we see a dip buying move in gold. So this is what generally happens, and this is what has been repeated over the course of several times in the past years. And right now I expect the same thing to happen. We saw a 6% decline, 6 to 7% previously, and I expect a same percentage of decline this time as well. I see that gold can trap buyers, gold can top out for the short term before we start to see fresh new all-time highs being created by gold. Now heading over to our current date. Initially on Friday we saw an overall strong bullish candle on the prices of gold. We saw gold taking support from this intraday demand area around the 3950s, but we still didn't break the previous all-time highs around the 4060s. This candle had very less conviction and we are seeing some kind of a consolidation move between 3950s and 4050s. And I think in the short term we can see a pullback type of move in the prices of gold before we see a dip buying opportunity. Now correlating this with the previous top out move in gold around the tariff escalation, if we see that what percentage, if we get a 6 or to 7% move in gold to the downside, what prices it will test. We can see around here, if we get a 6 to 7% pullback on gold, we will be testing the 3780s demand area on the prices of gold. Now heading over to our H4 time frame, like these are all the technicals. We have already discussed the recent fundamentals. Okay, so heading over to our H4 time frame, we can clearly see that this is a strong demand area around the 3780s on the prices of gold, and also we can also add the confluence of the fib retracement as well to get a more better idea. By adding the fib retracement tool, we can see that we are getting a 61% retracement around this 3780s 3790s demand area. So this is a 6 to 7% pullback area, this is a 61% fib retracement area, and this is also a previous strong demand zone where we saw some type of a consolidation before gold eventually breaking out higher. And I expect the same kind of move to happen again. I expect gold prices to go down to see some profit taking move before we start to go higher. So I will be looking to buy gold next week. I'm not a bear on gold. I'm not any type of I'm not in any type of shorts. I'm not shorting gold and I'm not saying to short. I remain bullish on gold due to this recent tariff uncertainty, due to the labor market weakness, due to the US government shutdown, due to the rate cuts pricing. All of these factors continue to support the prices of gold. But in the short term, I think that with sudden uncertainty and with sudden liquidation, we can see a gold prices doing some type of a profit taking move and testing these 3780s or even the 3730s 3730s level before we see gold bottoming out in the short to medium term. So this is what I expect on the prices of gold. Now before we head over to stocks or before we head over to Bitcoin, I want to show you all something. Let's go onto our MRKT terminal again and see the shape of the US economy. If we see the shape of the US economy, we can see the interest rates have been declining recently. The inflation, initially we saw a decline, but recently we are seeing some type of a sticky inflation. Overall, still aligned with the long-term Fed goals. Unemployment rate at 4.3%, still well below the average unemployment rate and still well below the Fed projected forecast for the year end. But recently it has been rising, so we will need to keep an eye on this. The GDP growth, initially we saw a decline, but right now it is holding very strong around the 3.8%. Consumer sentiment index has been declining recently. Retail sales a very strong rebound recently with a 0.6% growth overall. The manufacturing sector overall holding steady, overall beating the expectations of the analyst, but still in the contraction territory. ISM services PMI holding steady, like barely holding the expansion territory, but still it is holding that expansion territory at least. So the overall shape of the US economy is mixed to bullish, and along with this you are also getting rate cuts. The US labor market is obviously feeling of some cracks with the very bad NFP reports recently, but still the unemployment rate is not that much concerning right now. We are not in a type of a recessionary trade. The unemployment rate, the labor market, yes, we saw some sell-off recently, some cracks, some cooling off recently, but overall, in the long term, it is still well below the expectations of the Fed. Okay, well, I mean like within the expectations of the Fed. So there's nothing major to be worried about. Okay, this is the thing number one about the US economy, the labor market and the inflation and the interest rate story. Now heading over to our charts and going over to first of all SPX or Bitcoin. Let's go to Bitcoin first. Overall, yes, we are seeing a global market sell-off. We are seeing Bitcoin, we are seeing the SPX, we are seeing the Nasdaq, Russell, Dow Jones, everything falling from the cliff. But just zoom out your charts and just zoom out and just see that is this really a crash? Overall, all the markets, if we talk about Bitcoin, we are still holding the longer term upward trend. We are still bullish. If we see the Nasdaq, overall in the long term, does this look like a market which is in panic? No, it is strongly bullish. Okay, the higher time frame trend, even the short term, you can say, even from the April 2025. Overall, does this look like a market which is crashing? No, we are very bullish on it. If we go onto the SPX, like I'm talking about the technicals right now, does this look like a market which is panicking, which is in a very steep type of a sell-off? No. Overall, the long-term trend on all the risk-on assets is still very bullish, the technical trend. And now talking about the fundamentals, we just saw that we are getting rate cuts. Rate cuts are bullish for the SPX. Rate cuts are bullish for the Nasdaq. They are bullish for the Bitcoin. They are bullish for the oil. We are getting rate cuts. The US economy is overall holding strong. So again, a strong US economy is bullish for the Nasdaq, bullish for the SPX, bullish for Bitcoin, and bullish for the oil prices as well. Okay, this is the broader term picture. This is the longer term picture, right? The labor market is still within the expectations of the Fed. Okay, so this is again bullish for SPX, bullish for Bitcoin, bullish for all the risk of assets. Overall, the long-term picture is still bullish for these markets. Now, in the short term, yes, we have got a recent fear with US and China trade war escalations. But again, this is not a long-term thing. We have seen it in the past around here, and we are going to witness it again. Maybe we will see a continued sell-off for the short term. But overall, we all know that this is just a negotiation tactic. If not tomorrow, then maybe day after tomorrow, maybe next week, maybe next month. But we will see China and US again having negotiations. China and US again coming down towards a deal. Because that's how the general trade, the global trade works. Okay, you can't just put 100% tariff on some country and you can just go on with that for years. No, that's not what happens. Obviously, this will impact your country and their country in a very bad manner, because the overall you will be disrupting the overall supply chain of different items. That's why you can't just do that for the long term. In the short term, yes, and in the short term, obviously, you will see its reflection in the global markets like we are seeing right now. So this is the thing. Don't panic sell. Wait for the dip, wait for the sell, wait for people to get trapped, wait for the late buyers to get liquidated, and wait for everything to happen, and then just simply buy. Don't rush. It's that simple. Now heading on to Bitcoin, and again we will try to see the confluences from the past. Previously, Bitcoin topped around the 104k, 105k, and it topped out again because of the tariff uncertainty around this general area in April, around something like this. So we saw a steep decline in the prices of Bitcoin. Okay, and this was again, if we see the percentage of this crash, it was from the highs to the lows, it was around a 31-32% crash. But overall, if we go and zoom out, we can see Bitcoin held its overall long-term trendline support area. Whenever we go and test the support, we go back to the upside. Again and again, every sell-off has gotten bought up back because of this trend line. Like, this is the technical confluence which we can add to our trade, our longer term trade. And I think we can see the same scenario repeating here. Like we saw here, a double top, we saw a 30-32% sell-off before we saw again a fresh new all-time highs. Now we again had a double to triple top, and again if we can see, like if we just see the percentage, if we are going to see a 30-32% crash, we can expect, okay, so this is around a 30% crash around this general area, okay, around this 91, 92, 93 area, around a 30% crash. So we can see again Bitcoin repeating the same scenario. This is the double top here. saw a sell off, double top, saw a sell off, double top. We can again see a sell off before we start to go back up from this general trend line area or general trend line support, which is holding very strongly over the long term. Zooming into our charts, we can also see that this is also a demand zone or our daily time frame as well. So yes, I'm very well expecting Bitcoin to return to this area. This will be a 10 to 15% rise, something like this, from the current prices, and test this 92, 93, 94, 95k, this general consolidation area overall. And if we see it, we can expect Bitcoin bottoming out around this area, with obviously from a technical perspective we will need to keep an eye on the fundamentals on that time as well. But technically we can see Bitcoin prices at least testing this area. If not bottoming out, we can at least see a test, and then if that things are cooling off right at that time, if Trump is, there are chances of a takeover Trump, something like this, we can see Bitcoin bottoming out around these prices, and I am highly expecting that overall. So this is my trade plan for Bitcoin. I will be looking for this general area to buy the Bitcoin dip if it happens, if it tests this area, and also I will be keeping an eye on the fundamentals, the sentiment at that time, to improve the risk to reward of my trade. Heading over to our US indexes, again overall the US indexes, like this rally overall, it was, you can see, the most hated rally of history. Why? Because since this rally started, you were not seeing any type of major pullback. All you were seeing were like this was maybe the biggest pullback, or maybe this was overall only you were seeing a 1 to 2% declines and fresh new all-time highs again. This market was so much bullish that a tariff news, only a tariff news, which everyone knows eventually will be taken back, this type of news had a major impact on this market, because it was, the sentiment was highly tilted to the bullish side. The retail, the hedge funds, everyone was buying the highs, everyone was getting trapped. So a small news hurt this market a lot, and we saw a sharp sell-off in this market. Now I believe overall, if we even go and again do the percentage thing here, if we get let's say even a 7 to 8% or even a 9% or even around a 10% pullback in this market, it will still technically remain in a bullish trend. Like, this is how much overbought this market is right now. So I'm bullish on them. I'm not going to sell. I'm not short on this market. I'm not bearish on the US indexes, because the overall long-term picture remains bullish for the US indexes. But yes, I am waiting for a kind of a bigger dip. Maybe I will be looking to do my first try around these prices, around the 6200, my second try around the 6100 prices, and my last try, or third try you can say, not the last, around the 6050s prices. So these are my general areas where I'm looking to buy the SPX for the long term, taking it as a dip buying opportunities for now. Now at the same time, these are the technical levels again. I will also keep an eye on the fundamentals as well. If the trade war tensions are reducing or not, if you are expecting more escalation, stuff like this. Obviously we will need to keep an eye on this, but based on the current scenarios, current expectations, I think that this is not going to be a 15-20% type of a sell-off, or the type of a sell-off which we saw all the way back in April. I think this dip will eventually get bought much earlier than we saw the previous April dip getting bought. Okay, so I'm bullish and I'm just waiting for some dips. I'm bullish on gold, I'm bullish on silver, I'm bullish on everything. I'm just waiting for dips. For the US oil, I am bullish on it as well, but maybe I will now like to wait. I will wait for the US indexes to US oil to show me some sign of a bottoming out pattern. Like, this is a very strong weekly and daily demand area, and the US oil, I'm bullish on it generally, because obviously recently you had the tariff uncertainty, it acted as a bearish catalyst, but overall you are getting global rate cuts. You are seeing a strong US economy, a rebounding US economy. Okay, the geopolitical tensions, at least in the Russia and Ukraine, are still elevated. Okay, so all these factors in the short to medium term, they still support the prices of gold. And with rate cuts, we can see US economy expanding more. If the US economy expands, if you are getting rate cuts, there will be more investments, more business expansions, and eventually more demand of oil as well. So I think oil is in the process of bottoming out, but I will like to see some type of a bullish structure, some type of a new higher highs, higher lows, something like this before I eventually go long on the prices of oil. Overall, I remain bullish, but looking for some type of technical confirmations. So this is all what I have planned for the upcoming week with this tariffs uncertainty, with the economic data, with the labor market inflation, or the overall current shape of the US economy. Lastly, I'm bullish on everything. I'm just waiting for dips. Whether it's gold, whether it's Bitcoin, whether it's SPX, or whether it's oil, whatever it is, I am waiting for dips. Overall, I remain bullish on everything. So yeah, this was pretty much it for the video. If you liked the video, make sure you hit the like and the subscribe button, and if you have any questions, make sure you drop your comments or questions in the comment section below. And if you want to check out the resources, the tools which I used in this video, the MRKT terminal, or if you want to follow us on our Telegram channel, I will drop all the relevant links in the description below, and you can check out things from there as well. Best of luck for your upcoming trading week.